Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit in Equities. In this video, we'll be talking about 5 stocks which can double your money. Please watch this video to know more. Now the first stock on the list is Himadri Specialty Chemicals Limited, which is available at Rs 123.90 and the face value for it is 1. The symbol for it is HSCL. Now Himadri Specialty Chemicals Limited is a coal tar pitch manufacturing company. The company manufactures coal tar pitch used in the manufacture of aluminium, which is used in automobiles, televisions, rockets, beverage cans, wires, cables, smartphones, furniture and foil wraps, among others. Now HCL continues to post top-line revenue growth. The company is on the verge of commissioning a specialty carbon black line. This is a promising upcoming segment according to analysts. The company has gradually lowered debt and is generating healthy cash flows with CFO yield at 5%. ICICI Securities says that they expect HSCL to clock sales and profit after tax CAGR of 22.7% and 28.5% respectively in FY20. Now, as is evident from the 1-year chart, this company has been an underperformer throughout the year and not much wealth has been created here. The company is a mid-cap with a market capitalization of 5,184.07 crores. The EPS of 6.43 translates into a very cheap price to earnings ratio of 19.27 when compared with the industry PE of 37.44. The book value of 34.78 also translates into a reasonable price to book ratio of 3.56. The company has a debt to equity of 1.0032, whereas the return on equity for this stock stands at a figure of 0.1432. The company's dividend yield is pretty low at 0.08%, whereas the promoter holding for this stock is just about average at 48.95%. The 52-week high is 196.80, whereas the 52-week low for the stock stands at a figure of 106.10. Now the second stock on the list is Graphite India Limited, which is available at Rs 1035.85 and the face value for it is 2. The symbol for it is GRAPHITE. Now the electrode makers' earnings are expected to reach a record $5.1 billion this year, up from $1.5 billion in 2017. This strong turnaround comes after 3 years of straight losses. Graphite India is the largest producer in India and is trading at just 5 times its 1-year forward price to earnings, making it the cheapest graphite producer globally. Analysts see multi-year earnings driven by a super cycle in graphite electrodes used for EAF steelmaking. Graphite's valuations does not appear to have correctly priced in the strength and longevity of this cycle, says Anush Singla, analyst at DSP Merrill Lynch. They believe that a peak cycle to trough multiple is appropriate given earnings are forecast to peak in FY20 and then modestly decline. These multiples compare to the stock's 10-year multiples of 11 times for price to earnings and 6.5 times for EV to EBITDA. Now looking at the 1-year chart, it's evident that this company has been on a beautiful uptrend throughout the entire year. However, of late there had been a correction, but the stock has again resumed its uptrend. The company is a large cap with a market capitalization of 20,237.98 crores. The EPS of 89.17 translates into a price to earnings ratio of 11.62, which is much cheaper when compared with the industry price to earnings ratio of 18.75. The book value of 133.17, however, translates into an expensive price to book ratio of 7.78. The company has a dividend yield of 1.64%, whereas the promoter holding is another strong factor for this company and stands at a figure of 65.22%. The 52-week high for the stock is 1,127, whereas the 52-week low stands at a figure of 432.80. The third stock on the list is Gujarat State Petronet Limited, which is available at Rs 167.65 and the face value for it is 10. The symbol for it is GSPL. Now Gujarat State Petronet Limited is a natural gas infrastructure and transmission company engaged in transportation business. The company is engaged in transmission of natural gas through pipelines on an open access basis from supply points to demand centers. It also generates electricity through windmills. Now tariffs for GSPL's HP pipeline has been raised 28% to Rs 1.35 per SCM from April 2018 for 5 years. Analysts have revised up FY19 EPS estimate by 6%. GSPL's transmission unit is seen to report good volumes in the backdrop of growth in CGD and PNG sectors and higher LNG capacity in Gujarat. Now ICICI Securities says that the expected upward revision of transmission tariffs by PNGRB is a positive and has led to an upgrade in earnings. Now looking at the 1 year chart, it's evident that the stock has not really done much and has been an underperformer throughout the entire year. Now the company is a mid-cap with a market capitalization of 9,453.46 crores. The EPS of 11.71 translates into a price to earnings ratio of 14.32, which is largely in line with the industry PE of 13.80. The book value of 89.78 also translates into a reasonable price to book ratio of 1.87. The company has a debt to equity of 0.4276, whereas the return on equity for this stock is a strong number and stands at a figure of 0.2349. The dividend yield here is 1.04%, whereas the promoter holding for this stock stands at a disappointing figure of 37.65%. The 52-week high is 235.80, whereas the 52-week low for the stock stands at 156.45. Now the fourth stock on the list is Jindal Stainless Limited, which is available at Rs 55.75 and the face value for it is 2. The symbol for it is JSL. Now Jindal Stainless Limited is a stainless steel manufacturer with a capacity of 1 million tons per annum. The company's products include stainless steel products, ferroalloys and metallurgical coke. Now JSL went in for debottlenecking initiatives to expand capacity to 1.1 metric tons from 0.8 metric tons by end of FY19 at a lower capex of Rs 40 to 50 crores. Given higher market share and improving profitability with a change in product mix to value-added product, return ratios may remain strong and will be higher compared to European peers, is what analysts have to say. MK Global says that they value the company at 6.5 times FY20 estimated EV to EBITDA with a target price of Rs 151. Now looking at the 1 year chart, it's evident that the stock has been underperforming throughout the entire year and not much wealth has been created here. The market cap of the company is 2,671.66 crores, which indicates that the company is a mid-cap one. The EPS of 7.67 translates into a price to earnings ratio of 7.27, which is cheap when compared with the industry PE of 10.99. The book value of 49.07 also translates into a reasonable price to book ratio of 1.14. The company does not pay out any dividends, whereas the promoter holding is a strong factor for this company and stands at a figure of 65.43%. The 52-week high for the company stands at 132.75, whereas the 52-week low for the company is at a figure of 48.40. Now the final stock on the list is National Aluminium Company Limited, which is available at Rs 67.05 and the face value for it is 5. The symbol for it is NATIONALUM. Now National Aluminium Company Limited is engaged in the production of alumina, aluminium and power. As is evident from the 1 year chart, the company has been an underperformer throughout that entire year and a lot of wealth has been eroded here. However, analysts have raised Nalco's EPS estimate for FY19 by 5.5%, mainly due to strong aluminium pricing and depreciating rupee. Only 10 to 15% of its cost of production is incurred in dollar or linked to dollar pricing. Nalco has increased bauxite production by 3% on account of a new block at south of Panchpatmali mine. It has also started work on 1 MTPA expansion of alumina refinery at a capex of Rs 5,540 crores. Now the stock has been trading at attractive valuations of EV to EBITDA of 3.4 times FY20 and PE of 7 times FY20, says Sanjay Jain, the analyst at Motilal Oswal Securities. The company is a mid-cap with a market capitalization of 12,960.29 crores. The EPS of 9.83 translates into a price to earnings ratio of 6.82, which is much cheaper when compared with the industry PE of 22.94. The book value of 54.35 also translates into a reasonable price to book ratio of 1.23. The company has a debt to equity of 0.0305, whereas the return on equity for this company stands at a figure of 0.0603. One very strong factor for this company is the very high dividend yield, and it stands at a figure of a whopping 8.5%. The promoter holding is also a strong factor and stands at an above average figure of 56.59%. The 52-week high is 97.60, whereas the 52-week low for the stock is at a figure of 56.55. Now friends, an important point to remember, this stock is a cyclical and most cyclical stocks would peak and trough at unexpected times. So one should be very careful while dealing with cyclical stocks. Also friends, the market condition is not very strong as of now. So please exercise extreme due diligence while going ahead and investing in stocks or getting rid of them. Also, if you are benefited by the content that we produce on our channel, please don't forget to share these videos. This motivates us to go ahead and make more such videos for you. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Also friends, this is not our own research. We'll be providing a link to the source for this video in the description section. Please go through the article to build more conviction around your investment decision. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.